So I just did a quick segment on what our thoughts are for the market and that we are cautiously optimistic coming into 2025, although we do expect plenty of volatility, right? And we talked a little bit in some of the previous segments about staying the course, the large cost of missing out on the best days, and so on. And so one of the things that I wanted to talk about are the risks. So what are some of the risks? Well, first of all, the volatility is a risk. High valuations are a risk, and we've talked about that. But also policy changes like tariffs, which could impact inflation and limit growth. The other things we need to be concerned about are immigration reform, which would hurt our labor supply and then drive up unemployment, and also drive up wage inflation, which of course has been coming down, and that's been very helpful. And so we've got to watch immigration reform, we've got to watch tariffs, right? And we've got to watch also fiscal policy. And so all of these things can affect economic stability, leading to greater market volatility. So these are the things that we're keeping an eye on in 2025. And by the way, to the extent that we're concerned about those things, there are remedies. So yes, there could be some short duration or some cash, but we don't love cash as a long-term investment. It's really not great for that. But we have hedging strategies that we use. We'll also use high yield, and we'll also use private credit. And so there are a number of strategies. We have a value sensitive approach. So there are a number of strategies to help us address these risks that we are seeing in the market. And remember, above all else, is staying a long-term investor and not letting so much of this day in or day out or this quarter or next quarter, affect what should be a strategy that's lasting you years and maybe even decades. Okay? Thanks.